like I just mentioned today, we're really honored to have with us a New York Times best-selling author, and as she likes to say, a recovering investment banker, Carol Roth. And we will also welcome your questions. So please, any questions you have for Carol about her fantastic book, please enter those in the chat box, and we're going to try to get to those at the toward the end of our hour together. And Carol, you've written really what is it's an important book. It's provocative. It's also, especially with the title, it's terrifying. You will own nothing. But the book isn't really just also complaining. Correct me if I'm wrong, but the point of the book is you're trying to help people be aware of these trends, and so that they can navigate what is, in a sense, an emerging global financial order. And so how do we preserve and grow our wealth, kind of given all of that? So I guess to just throw something out in the big kind of 40,000 foot level, why is private ownership so important for individuals and families?
Well, Wayne, thank you so much for having me here, and for PRI. You do wonderful work, and everybody should be supporting the work that you're doing out there. And I take the whole concept of ownership and the American dream very seriously. I came from a blue-collar family, and neither of my parents graduated from college, and they worked their way up and had the opportunity for me to go out and seize that American dream. And I wanted to make sure that we preserve that for everybody. And over my more than quarter of a century of experience in working with people and helping them create wealth and go after wealth creation opportunities and preserve the wealth that they've created, there's one thing that I've learned above all. There's just one complete truth out there, and that is that wealth comes from ownership. You have to own assets, and particularly those assets that have the opportunity to retain value and to appreciate in value. So the first time I see this meme, "You'll own nothing and you'll be happy," going across social media several years ago, and I saw it's tied to the World Economic Forum, which is littered with the business and political elites, I thought, like, this has to be wrong. Right? We know that wealth comes from ownership. Why would the business and political elite, who have benefited from being owners, why would they be predicting the end of private property by 2030? Somebody must have taken this out of context, as often happens, right, on social media. And it took very little research in this particular case to find the video, which is still on the World Economic Forum's Twitter stream, at least as we're having this conversation. And that you get that first prediction of 8. All 8, by the way, are fairly terrifying. But the first one, which came from their Global Futures Council, that's what it says on the video, is that you'll own nothing and you'll be happy. And so there were a few things that struck me from that. One was obviously the barriers to ownership that we're talking about. The second, the phrasing. It was "you'll own nothing." It wasn't "will own nothing." They weren't predicting that outcome. They gave the tell in the way that they put that out there, that somehow there was a class of people who will still be owning many things, but you just won't be owning anything. So that sort of struck me. And then "you'll be happy." And this idea that if you could buy into this concept of what a free life you would have, wouldn't it be great? Couldn't you just be the Instagram YOLO lifestyle of I'm just going to traipse around the world and own nothing? It's just one of those pipe dreams that we know people throughout history who have not had ownership of property and haven't had their private property rights enforced. They have been unfree, they have been unhappy, in many cases, they've lost their lives. So you have to ask yourself, why is it that they're pushing, not only the non-ownership, but the buy-in piece? And I think as we see the global financial stakes shifting, which we can get into, and you have, people who see that happening, they want to make sure that they stay wealthy and powerful, the will that was left out of the yule. And if they can get you to buy into that concept, you just go along with it and decide that you're going to rent your life as a subscription or a service and become the product. It makes it much easier for them if you're going along willingly versus them trying to have to force it upon you.
Is the justification that you'll be happy that just it's like a carefree, no responsibility lifestyle? I mean, how do you justify you'll be happy?
So I don't justify it at all. I think the literature that I have seen, whether it is from organizations like the WEF or the media running cover, is this concept that yes, it's very carefree. You won't have a trouble in the world. It's sort of what the government does, come and depend on the government and will take care of you instead of going out there and finding your own way and getting your own success. It's a very different mentality that obviously has different outcomes. And as we know that, that doesn't really work out in reality, but the dream sounds amazing. It sounds great that you'll have this wonderful place to live. And, if there's a leak in the roof, someone else will come fix it. And you don't have to worry about mowing the lawn because it's somebody else's problem. But the implications of that are many. And I think for a lot of people whose balance sheets have been wrecked by, I'm sure, many of the things that we'll talk about, and certainly a lot of things I talk about, and you will own nothing. I think there's a psychological protection mechanism going on. If you've been told that you're a victim, or you've been told that the American dream is no longer attainable for you, or it's going to be really challenging, you see your balance sheets, you see the cost of everything that have been inflated by policy, and you're just not feeling really great about it. It's much easier for you to lie to yourself and to others and say, well, this isn't something I wanted anyway. I wanted to have this detached lifestyle, right? And it's really actually quite sad. You want young people to be excited and to be going out in the world and saying, yes, I want to own things. They also, particularly that the younger generations, have been trained for non-ownership. They're living in these digital worlds where they have basically taken what I call ROI, return on investment, and supplanted it with ROE, return on equity, or excuse me, return on ego, ROE, return on ego. And so they're trading the investment aspect for clicks and likes. And, I'm going to go and, spend all my time to generate, a lot of attention for myself. So I get that dopamine hit and I feel great, but I don't know how many likes it takes to pay your rent or to then actually invest in a house. I think it's an infinite number. So we've had this sort of training for young people, and we've seen the implications for that is that many of them, aren't getting driver's licenses or getting them much later than previous generations did, and they're struggling with things like home ownership. And so there is this training under many different facets, whether it's from big tech, whether it's from the climate catastrophizers or whatnot, that keeps reinforcing that, oh yeah, no, it's good, you definitely don't want to own things, you're going to be so much happier. And if they don't think that they can actually own things to begin with, they just start to go along with that narrative.
Right. And, and the irony, of course, being that the ownership creates the growth, creates the innovation to address the problems of global climate change, all of these other issues that we're dealing with. One of the things that struck me, and I'd love to turn our conversation toward, is you mentioned this earlier, the obstacles, because one of the things I think your book does excellent, You Will Own Nothing, I'll keep talking about the title, but the idea that there's lots of different unrelated obstacles that are out there that are actually, when you kind of put the picture together and connect the dots, you see that there's all of these obstacles for just middle-class families to gain wealth, to have asset ownership. One of those, I'm an economist, so go straight for the fiscal policy and national debt. And that you have a whole chapter talking about this, where our national debt, for the first time, it's about the size of our entire economy. And this is one of those kind of warning bells that typically go off when you have that much debt that's the size of the economy. people start to really get concerned. So I guess let me just throw it open to you, because you have a great chapter talking about how debt impacts our prosperity, our national power, and from an individual perspective, our ability to amass wealth. So I'd love to kind of hear your thoughts on that.
So this ends up being even more timely than expected. At the time that we're recording this is right after the U.S. has just received a credit downgrade from Fitch, just the second one in history. The first one in 2011, still being in place from S&P, and Fitch issued a warning at that time, and now they have gone ahead and said, okay, we're going to take action. And it's funny because the rumblings, everybody's incredibly surprised by this. But as you said, we've got debt to GDP on a public basis that is exceeded 100%. I think it's almost 125% as we're having a discussion. The IMF has put out numbers which the Janet Yellen, the Treasury Secretary, has noted previously, seems to have forgot about them in recent years, that the debt to GDP load becomes unwieldy somewhere in the 70 to 80% range. Is many of us would like to see it much lower, but that's the place where it really starts to top out and become a concern. We have the Treasury and the CBO who has put out many charts and many analyses that have said we're on an unsustainable fiscal path. So the idea that all of a sudden we're waking up and going, oh, wait, the fiscal situation of the United States isn't great is a little crazy. And I think it's one of the reasons why we're seeing the shift in the global order, because, with debt comes desperation, because the people who are in power at the government and at the Federal Reserve, they only have so many things they can do, so many levers that they can pull, and then they're out of options. So if you think about the government, I know everybody likes to think that they have money because they collect it and because they can also make up money. But if you think about money as the proxy for productivity, they're not actually producing anything of value. So it's not like they're out there creating something and adding to the productivity to back up that money. So they only have so many choices, right? They can take more, they can extract more from us via taxes or fees or whatever direct amounts. And at some point, not only does that become politically unpopular, but we know it has an impact on the economy. You can't just keep taking money away from people and not have that have an impact on their own receipts. In fact, we've seen as we've had these recent tax cuts, outside of a little blip for COVID, that the government has actually increased the receipts that they've collected when they've cut taxes. So that's sort of one mechanism that they can use. They can cut services, which is also, very politically unpopular. And I use services loosely. Many of them are promises and, things that we could have otherwise. But the things that the government has promised you, we could cut back on that. We saw how well that worked out for France several months ago when they decided they were going to raise the retirement age from 62 to 64, and a bunch of people decided to burn down Paris in response. So, that's a challenging road that a lot of politicians don't really have the backbone for. And then their option is to basically issue more debt, which at this point, not only takes away from, basically our productivity and wealth, because you have to have more money going towards debt service and whatnot, but we're at a point where there's nobody left to purchase that debt. It's not like there's this huge demand from other countries. We have some of the biggest countries in the world that have actually been getting rid of their treasury holdings. Albeit, we have some renewed investor demand for low duration treasuries like T-bills because the interest rates are super high. From a long-term financing standpoint, there isn't just, tons of interest in having that financing. And if you look at some of the work that's been done by other economists, you'll see that before 2014, you'd have other central banks that were financing our deficits, but really since 2014, we've been financing it ourselves. So the Fed has been monetizing the debt, coming up with money out of nowhere and purchasing the debt. We saw that via COVID. And then we've seen the outcome of what happened when the Fed did that. They added $9 trillion to their balance sheets, and we have been paying the price for that quite literally in terms of a decrease in purchasing power and a massive increase in inflation. So all of those outcomes mean some sort of an impact for you, either that direct grab of your wealth, the decrease of your purchasing power, or the cutting back of promises. And those are the only choices that they have. And so it becomes more desperate, and they do things that are more ridiculous. And when you look back at the changes in kind of major financial empires over time, it's not usually an outside force that has made them collapse. It may be part of the final straw or the catalyst, but these empires all collapse from the inside. Whether it's the Roman Empire or the Dutch or the British, it's because they do the same things. It's the same pattern that rhymes over and over again, with these governments getting too big and taking on too much debt, and then they can't fund the military and it weakens them, and it's the same pattern over and over again. So this scenario sets up the whole thesis, not only for the shifts in the global financial order, but also for the implications for your wealth, some of which we have started to live through, some of which may be coming, but none of which are great for the prosperity, particularly of the middle and working class.
And to me, one of the things that really reinforces what you were saying in the book is the idea that with these higher interest rates, we're now going to be soon will be spending more on interest than national defense. And that when you talk about the British Empire in the book and the Dutch and the Romans, that really, the rhyming of that is kind of scary.
It is. I mean, it's one of the things I like to share on a frequent basis, is that we think because technology evolves, that civilization has evolved and human nature has evolved. The background may have evolved, but human nature remains very, very constant, which is why we see these rhymes throughout history and these things like, oh, I feel like I've seen this movie before. Oh, then I saw the sequel. Now we're in the trilogy. I kind of know how this ends. And it's staggering. And, unfortunately, even though many of us have seen this along the way and have seen the signposts, the nature of politicians who have that power is to just wait until it's somebody else's problem. So they're just going to prolong it as long as possible and do what they can to get what's theirs and get out of the way, even though theoretically, if the system comes down in a meaningful way or changes in a meaningful way, it really will impact everybody, I believe, to everyone's detriment. But the short-term myopia that we see, whether it's in Wall Street or with some of these global elite central planners, just ends up being the same thing every time. And I know everyone wants to think it's a big cabal and there's some big master plan. Honestly, it's just basic human nature, and human nature, unfortunately, is just highly, highly predictable.
It's like a swarm of bees just kind of going for the waterfall. No one's
Right.
directing it, but here we go. This really kind of dovetails well into this thing you talk about in the book called the good ideas to bad outcomes. Because I think that when you talk about excessive government spending or excessive regulation, it really comes from that. I was hoping you could kind of tell our listeners kind of what that is and why it's so important.
Yeah, so I actually got this in part from Peter Thiel. I was at an event for Alex Epstein's great book, Fossil Future, and they were having a discussion. And Peter put this great framework around it that resonated with some of the other frameworks that I had used. But a lot of things come out of there's an issue or a perceived issue, and people really believe in it or have some heartfelt thing that they want to do, and it's a good idea. And I'll take the climate scenario, the environmental scenario. It's like, we all want to be good stewards of the planet. We all want to breathe clean air. We all want to make sure that the animals are well taken care of. I think that, that's pretty universal. Maybe there are a couple of anarchists that don't want it, but like most of us can believe it. The challenge is that it ends up morphing into this model when you have central planning. And so it starts out with this good idea. And then there's a class of, Teal calls them racketeers. I call them profiteers just because I think that's slightly more generous, but he might be more right in that. And there ends up being a whole class of people who realize that by jumping on this idea and really trying to shape it and control it, that there's a ton of money to be made. And again, very human nature and somewhat capitalistic in nature, but you have to kind of understand the reality of it is that, okay, we see this green movement. Think about all of the money that we can make around this. It's enormous. And, it puts us in the position that we get in early and we lead it and it's to our benefit. So of course we're going to go along with it. We can't go along with something else, even if something else makes more sense, because we haven't figured out how to make money from that. So, we know who's feeding us and we're going to be on that team. And then you get these, what I call, well, he called them, I believe, the useful idiots. And it goes back to that ROE, that return on ego, people who then entrench this into society. And they're not necessarily getting the dollar benefit, but they're getting other benefits, right? They get to put an emoji in their bio lane. They can wear a t-shirt or put a sign on their lawn. They get a pat on the head. They might even get an invitation to the White House for a photo op because they are on the right side of the narrative dictated by these group of people who are saying they're doing this for the good of society, for the children. It always is. And it's really just been co-opted into something that is a cash grab at I think the best, and at worst becomes really damaging because everything gets viewed through this very myopic lens. We saw this during COVID, right? We've had this conversation before where it's like, oh, we're so focused on this one thing that we kind of have forgotten about like the entire ecosystem that's impacted. And so I feel like this happens over and over again, where you have something where we basically all agree it's a good idea, and market forces, could solve for it very nicely, and then it gets co-opted into central planning, and it ends up turning out with these disastrous outcomes and a lot of fee extraction in the interim.
Yeah, and when I was reading it, what spoke to me is it rewards the cronyists, right? That
Yes.
You're the one that taught me this. I'm not going to call it crony capitalism because it's not capitalism, right? It's cronyism. But that's, if you look at the global climate change and solar power and electric vehicles, and there's a lot of reason to believe that neither one of those is the solution we need to address it, because they're highly polluting, they are ineffective, they're wasteful, they're expensive. I mean, these are not ready for prime time at bare minimum. Yet the cronyists, right, they make a lot of money off of it. And this falls kind of right into that framework that you were setting up, that people, the return on ego, oh, I'm driving a Tesla, so I'm part of the solution, when you're probably part of the problem. But it feels good. And Elon Musk is making a lot of money. And he makes all of his, people may like him, may hate him, but he is a cronyist in that he makes all of his money selling things to the government,
He's the best. He's the best at it. Yeah, he's the best at that.
And that's really terrifying, because that denies the opportunities that you've been talking about. That's so important.
Yeah. I also want to say, it also begets these control mechanisms, because part of making these things stick is, putting this infrastructure of control in place. And so if you're somebody who's, really concerned about the environment, and you look at what the people who are the purveyors of, I'm so concerned about the environment, there's a climate emergency. All the climate emergency people live in waterfront mansions and are flying on private jets to eat steaks and tell us that the water levels are rising, and you should be cutting back on fossil fuels, and you shouldn't eat meat. So you really have to pay attention to what they're doing. But then think about the stupid things that they're making us do in our lives. You can't have a gas stove, or, you can't have a ceiling fan, when like their whole countries like China, that now, because we're turning away from fossil fuels, are trying to ramp up both on the fossil fuel and in the mining of minerals that are, is very disruptive for the environment for some of these green solutions. And there's none of this big, things that will actually move the needle if you believe the thesis to begin with that's being addressed. It's all of these small, stupid things that wouldn't move the needle, even if we all bought into them, but have now established these control mechanisms and have taken away our freedom, our sovereignty, our quality of life for no real outcome. And so I think that that's something to be very aware is, next time somebody wants to take your straw or, whatever it is this really are they really trying to move the needle, or is there something else going on here? And I've yet to see anything that was really trying to move the needle, and or that the people who are pushing this narrative are actually doing in their day-to-day lives. When they start acting like there's a climate emergency, then perhaps I'll believe there's a climate emergency.
First, walk the walk.
Yes.
Now, what also struck me, and this is an issue we've been researching a lot at PRI, has been something near and dear to my heart. Environmental, social, and governance is both an investing and a management paradigm. People probably have heard the acronym ESG. And this is really that same phenomena that we're talking about with the government, but the private sector isn't immune from this either. So I was hoping you could spend a little time talking about kind of your take on the ESG and kind of how that kind of dovetails into the same story.
All right, I'll give my take, and then I want to get your take, because you guys at PRI have done a phenomenal job. I know this has been a passion point, and we need more people, more advocates bringing it to light. I'd love to tell everybody who's watching what ESG is, but I actually can't because there is no clear standard for it. And that's by design. I mean, we know what environmental, social, and governance theoretically mean, but in terms of what actually constitutes that, it changes. And that's really the point here. I call it business social credit, that basically you have a bunch of people who aren't taking any risk. They don't have any skin in the game. They're not actual stakeholders, but they like to call themselves stakeholders, but they're not. And they want to influence outcomes. And they're doing that by bullying businesses with, hey, you're not going to get access to capital, or we're going to hurt your share price, or we're going to remove you from the management team or the directors. Some very mafia-esque types of scenarios. And a lot of times it's using our capital. It's using money that, hardworking people have paid into pension funds and retirement funds that's being managed by these big companies that are throwing out these directives. And it's basically like a bunch of central planners, wealthy, well-connected people say, well, how do we get businesses to do the things that we want to do? And, we don't want to spend a bunch of money. We don't want to actually make the investments. How do we bully them into doing these things? And that's what ESG has become. And there has been a lot of pushback in a lot of areas because it has a little bit of that bad outcome model on both sides. In one case, you have that profiteering issue with a lot of individuals who are saying that, oh, we're an ESG fund, just slapping an ESG label on things to extract fees. And there have been many, across the globe, entities that have been slapped with what they call greenwashing, basically saying that you're doing something in an ESG manner, but it's indistinguishable from anything that you have done before. But now, because whatever ETF you were running or fund you were running wasn't extracting enough fees, and you have to put a highlight around it with this ESG label, you're extracting more fees. So that's one piece that's just just a basic profiteering extraction of fees. But the scarier part for me is the fact that it's impacting the investment outcomes and the innovation that comes with more free market principles. Companies are being distracted from doing what is in the best interest of shareholders, people either through their blood, sweat, and tears, their hard work, or by risking their capital, who have made investments in the business and now are shareholders of the business. That's the fiduciary duty of the board of directors, is supposed to be making sure the company is doing what's in the best interest of those people. And it always sort of aligns, right? Because if you are doing what's good for the customers and what's good for the employees, that ends up being a healthy business and ends up being good for the business. Now chasing this like weird moving target that, is something different, like, oh, weapons are bad. Oh, wait, no, Ukraine war, weapons are good. Private jets are bad. Oh, but Amazon needs to deliver packages. Oh, wait, but those ones are good. It's just so hypocritical and flimsy as it is. But even if it was a strict standard, I mean, who gets to make that standard? Is it your accounting firm? Is it BlackRock? Is it, a bunch of weirdos in Davos? Like, why should they decide? Why aren't the shareholders and the customers and the real stakeholders of the business actually making those decisions? And so that has a lot of implications for individual wealth in terms of the fact that, companies will do worse. And the statistics have shown that they do worse when they're not focused on driving the shareholder value. And we could make some discussions about, they should be focusing more long term than short term. There's some issues in there, but ESG just further corrupts that, and that they're using your capital as a way to do this bullying. And so it's really putting, your investments at risk, and then we're not getting the innovation from the company. So it's just net a really bad outcome for wealth creation opportunities and sort of the fundamental factors and foundation that have driven the success of the United States.
I agree with everything you just said. I mean, some of which I wouldn't say better. What I would add, and this was, I've been engaged on this issue. I'm showing myself to be really old here, but back in late 90s, early 2000, wow. You had corporate social responsibility, CSR, and you had your triple bottom line. And so to me, the ESG is just, that went away. We had the dot-com bust, and people realized, okay, well, now let's stop talking about silly time. But because then you had CSR funds, and CSR funds outperformed in the late 90s. Now, mind you, CSR funds were just basically investing in all the tech stocks. So you were basically saying, if you are overweighted in tech during a tech bubble, you will outperform.
Go figure.
Go figure. So, moving to today, to me, it's the same. It's the same concept. But what's really happening is there's a political agenda. And that political agenda is not getting through Congress where it belongs, rightly or wrongly. Right? Take global climate change. Perhaps we should have cap and trade. I don't think so, but perhaps we should. Perhaps we should have carbon taxes. I don't think so. Perhaps we should. That needs to be debated in Congress. It's setting the policy, environmental policy of the United States. That's Congress's kind of, that's their purview.
Yeah.
Not getting that done through Congress. So what's happening? Well, we're going to try to go the back door and get companies to actually act as if those policies were passed. And we're going to pressure them. And again, it's the same thing. We're going to use that scarlet letter concept, saying humanity is kind of the same throughout time. We're going to put that scarlet letter on you if you're not actually compliant with, what we deem to be. And who is this we? That's a really good question. But that's what you see. So now you see oil companies who do an incredibly important role in society, right? We wouldn't have our modern lifestyle without oil. And it's not just about powering cars and natural gas, and it's also about IV containers, right? We don't have plastic without oil. You don't have IV, so it's completely pervasive in our lives, and yet you're having oil companies saying, "Oh, well, we're beyond oil," right? BP was beyond petroleum. I think they've given up on that moniker. Hopefully, they have. But so I see it as inherently a political kind of end around proper processes. And then what you're then doing is undermining kind of the way corporations operate. You do create, again, cronyism creates opportunities for profits. And the economy is about incentives. If the incentives in the economy are set so that I can make more money being a cronyist than I can in terms of trying to serve my customers, you're going to see more people become cronyists. And so that's what we've seen. You've seen it with financial firms. You've seen it with public pension funds. They're all going that way. It's they're following their incentives. And so don't be surprised, if you put meat down on the floor, don't be surprised the dogs come and eat it. It's the same thing that, and so we're again undermining the efficiencies of our companies in the name of what's really an indefinable concept. And because you can't define it, then ex post it can be anything. Oh, look, ESG outperformed because that fund outperformed.
Right.
Well, it's just a broad-based fund that doesn't invest in firearms.
Right. No, first of all, I'm so glad that you added to that, because as I said, you've done so much work. But one of the things that really stood out to me is the fact that you said you've been following this for so long. And that's one of the very interesting pieces of information that I uncovered in my research, is that so many of these good ideas gone bad are the same ideas that have been repackaged over and over again. I mean, even ESG, Larry Fink, who is the CEO of BlackRock, the largest asset manager of the world, who has been a huge quote unquote catalyst, which is a very kind word in terms of ensuring that companies comply because of his ability to allocate or not allocate capital and to vote for directors and the like. He's been very sad that we've all figured out what ESG is, and said at a recent retreat that, okay, well, I'm not going to use ESG anymore because it's been politicized. Now, he didn't say he's going to stop doing the things that he was doing, that wasn't his problem, which is my problem. I don't care what you call it, but it was, oh, I'm mad that you figured out this moniker. And so we've already seen some changes to impact investing and sustainable development. And you're just going to keep seeing this cycle through and through with different words and phrases. So I think it's really important for people to understand the underlying concepts, because it's going to come with some lipstick and a new bow, and it's going to be the same old tired thing. Another thing that's been repackaged since 1971 is this concept of stakeholders, which is kind of central to this. Klaus Schwab, the head of the World Economic Forum, when he first started the predecessor, which was called the European Management Forum, he did it in concert with publishing a book. And this concept of a stakeholder, which again is somebody who isn't actually vested in anything, but is trying to weasel in and saying, I'm important, you need to listen to me, is something that he has been pushing now for more than 50 years. So the persistence of these ideas, and obviously the ability to profiteer around them, which has allowed that to continue on, is staggering. And so we just keep seeing them come up in different ways. And that's why, when somebody's like, oh, this you will own nothing thing is a new thing, it's not a new thing. It's Marxism, it's communism. It's something that, Klaus Schwab was pushing in 1971, the idea between a stakeholder versus a shareholder, somebody who doesn't own versus somebody who does own. So, maybe you haven't heard this particular word or phrase before this packaging, but these really bad, damaging concepts have been there. The difference today, and I think why it's more impactful, as we said, is because of these shifts in the global financial order. The fact that the US's financial house is in disarray, the fact that the Fed has not kept the dollar stable on an international stage, and people are getting, very sick of playing the game and letting the US, be at the head of the table running the game. So it feels different and it has more urgency now. But the infrastructure that's been trying to push this, the people have been trying to push this, many of them have been at it for quite a long time.
Right. And there was a question from someone who was listening in, who was asking about whether this is just coming from the UN Agenda 2030. And I think you kind of just answered that in the sense that the UN agenda it's another factor that's adding to the pressure. It's obviously not the only source, but now, and I think that's something that's different this time than previously, is now we have the World Economic Forum, the UN, all of these kind of international bodies who are in effect advocating for these exact same type of
Let me give you a date, and you can go back and source this in the book. But so that was part of my research, is that the UN has been pushing this agenda since the 90s in concert with the World Economic Forum under different names. And so, they had people sign on to their principles for responsible investing and other sustainable development goals. And so they have been pushing this way before the number 2030 ever popped up. Now that's the new target. But this has been going on for a long time. And, some people may say, well, why do you pick on the UN or WEF or whatnot? When a name of a person or a name of a group or a couple groups pop up once or twice, maybe even 3 times, I can go, well, it's a coincidence. These are big groups. When every bad idea that I look into ends up with the same groups of people, I can no longer say it's a coincidence. It's a coordination, right? I mean, that this is the same groups of people over and over again, to the extent that whenever I see somebody who is going to reimagine, rethink, repurpose, or change something that's working, pretty darn well, I always go back and I look to see if they're affiliated with the WEF. And every time except for once, they are. There was one time there's a group that's doing something that's super weird in Phoenix. They're doing this development, this 1,000-person development that has no parking spaces in Tempe, a suburb of Phoenix. They want you to have a walking city in Tempe, Arizona, the suburbs of Phoenix. And so I went through their people, and I did not see any ties there, but that was the only time when I haven't gone up. Yeah, of course, these people are all connected.
Right. And a walking city in Tempe may make sense in January, but in August, I imagine it's quite
well, and
difficult.
then apparently nobody can visit you. Like, you can't even there's no guest parking. I mean, the whole thing is just, it looked like a prison complex. It was like kind of staggering, but very on trend. And that's why I was alerted to it, because now that I've been talking about these you'll owe nothing concepts, I've got people sourcing like every crazy thing that they see and sending it to me on social media, and I have to kind of ferret through it. So, I came across that from, somebody's lead and went, wow, this is pretty scary, but right on trend with exactly all the things that we're talking about.
I would love to steer a conversation to the Federal Reserve, because you talk about them in a number of different chapters, and there's a lot to talk about because they're getting into digital currencies, right? And that's an issue. They're subsidizing corporations to compete with people directly when they're trying to purchase their homes. And so both of those, not to mention the inflation we talked about earlier, all of these are actually working against our ability to gain assets, because you're undervaluing the currency, you're inflating demand for houses, CBDCs or central bank digital currencies. That's a real issue. So I don't know which one you want to take on first, but I'd love to start talking about some of those things.
Yeah, so I mean, the Federal Reserve, the takeaway for me with them, after having been studying them for a very long time, is that in concert with the government, but very much driven by monetary policy, they have been the biggest enablers of non-merit-based inequality. I don't mind inequality for, Michael Jordan's the best basketball star, and, so he should get paid a lot more than, somebody who isn't very good. But when it's done by monetary policy and it's done by government policy, and that's who's getting to pick the winners and losers, not the merits and the talents and the free markets, that's a huge problem. And they have just driven trillions and trillions of dollars of wealth from Main Street to Wall Street. And I think that's a huge, huge takeaway. One thing that you mentioned is this idea of a central bank digital currency. And when I'm out talking to people in my sphere, many of them who tend to be a little bit more financially inclined, it is the number one concern of people, because there's been a movement towards Bitcoin and cryptocurrency on the basis that those who have been the quote unquote stewards of the dollar and they're supposed to keep it stable, right? That's part of their official mandate, one of 2 pieces of that, both on an international stage and on a domestic stage, right? Because we have the world reserve currency, they're in charge of that. They've managed to do absolutely neither. Usually you have to make a choice, okay, well, I'm going to favor the domestic for the global or the global for the domestic. And they just managed to do neither, which is creating massive issues for our wealth, and has been just this epic transfer of money. So the idea that these people who have burned our house down, the arsonists, are now coming to help, and now they've got a little water bottle and they want to throw it on there and put out the fire, is just it's just so frustrating to me. But they want to take this idea from these Bitcoin and cryptocurrency people who want to decentralize the currency. They don't want to have the government and the Fed have all of this control over the monetary system, and they want to just be able to have something that's more free. Whether or not you agree with their thesis, that issue underpins it. What the Fed wants to do is capitalize on that interest with a bunch of people who don't know anything about decentralization versus centralization and have a fully centralized currency. And there was a video that was making the rounds the other day, a professor from Cornell who was at the World Economic Forum, and he was talking about all these great things that could be done with the CBDC, including the ability to program them and to track it, and to basically restrict whatever it was that the government wanted to restrict. So if they, the climate agenda is burgers are bad, meat is bad, and Carol and Wayne go out for a burger and we both had, more than 3 that month, then, no, we can't pay anymore. Or they want to control inflation. Basically now their tool is we're going to change interest rates. Their tool could be, we want to just destruct demand. We're just going to turn off access to spending and you can't spend the money. Or with the cronyism we're talking about, we're going to give you more if you spend it at these approved places, which happen to be the approved places of our friends who extract wealth. And it's just incredibly sinister. And given the issues we've been through, there are so many carrots that they can use to get people who aren't financially literate to grant this approval that needs to happen, to push to make this happen. If you saw what happened with the stimulus checks, right? There were people like you, Wayne, like me, who were standing up and going, don't take this money. You don't want the $1,000. You don't want the $1,200. You're going to pay $10,000 a year for the rest of your life minimum by taking this. Don't do it. It doesn't work. And the people went, no, I need my stimulus. I need my Donnie dollars and my Biden bucks. I need to have that. They're going to do the same thing with CBDC, right? They're going to say, I'm going to give you 100 digital US dollars if you just give me one. And people are going to go, wow, I'm a millionaire. This is amazing. It's that old Saturday Night Live skit, which I referenced in the book, with Dan Aykroyd pretending to be Jimmy Carter during inflation and being like, wouldn't you like to have a multi-million-dollar house and wear a $75,000 suit? It's great because, they actually understood the concepts like money printing back then that have been lost from the conversation. And so you could see that. You could see, the inflation control being a target. You could see UBI. Hey, come on the digital dollar. It's the only way that we'll give you a guaranteed income. All of these things that are going to further destroy the value of the dollar, the wealth creation opportunity, but give them a tool to potentially pay down their debts by just devaluing everything. And so that's a really scary outcome. And it becomes even more scary. And I talk about in the book as I marry it with things like social credit, whether it's on the business side with ESG or on the individual side with a formal or informal social credit system. But again, you say something bad on social media, or we don't want you to have access to a firearm or whatever it is. Now they have the mechanism to fully control the access to the money that represents your productivity, your hard work, your investment. And there is nothing that I can think of that has more of a potential to kill our individual freedoms, our personal sovereignty, our agency, more than a central bank digital currency.
It's also ironic because it seems that the unbanked, which supposedly is something we're concerned about, would actually have even more issues under a CBDC because they're really outside the financial. I mean, I don't expect you to respond to that because I'm not sure there is a response beyond just the irony of it. the Fed's not just hurting things in the future too, though. You talked about, and I learned this reading the book, and I thought that that's really amazing that they're actually basically subsidizing corporations to compete with you to buy your own homes. So you're talking about if we want to actually get ahead, if you want to gain wealth, how does the middle class gain wealth? Well, through home ownership. I mean, that's the primary asset of most families. And now the Federal Reserve is subsidizing companies to inflate the value, which I guess is good if you own a home, but if you don't, you're never getting in.
Yeah, so this is a huge point of frustration. And I also learned several things in this research. So I'm glad that it was new to you as well. But this idea that you can rent the American dream, where we started, the biggest asset, as you noted on households' balance sheet, this long-term driver of family and legacy wealth is staggering. And what happened coming out of the Great Recession financial crisis is this has all been done by policy. Obviously, most people know that Wall Street got a bailout while almost 6 million people lost their homes to foreclosures and short sales, and there was a complete favoring there. But I don't think people realize the implications of the policy that followed. This 15-year period of interference by the Fed, 9 of that with zero interest rate policy, gave abundant, cheap capital to Wall Street, and they inflated the assets of everybody, or everything, every asset class. And that was great, as you said, for them, for the asset holders. But if you were somebody who was a saver or retiree, or you didn't want to take on that risk, you didn't get that benefit. So that all went to them. And when they ran out of asset classes and said, well, where are we going to find a return on our investment? Where are we going to find yield, at this point, without taking on more risk? All of a sudden, they started looking at single family homes. And before 2010, this was an amazing statistic I found in the research. Before 2010, there was no meaningful institutional capital in the single family home market. None. It didn't exist. There's certainly corporate entities that were mom and pops that did some of that, but it wasn't this organized effort where you had Wall Street investors that were backed by JP Morgan Chase and BlackRock and Capital One and whatnot, going out and buying tens of thousands of homes. Fast forward to the end of 2022, very short period of time, CoreLogic said that 1 in every 5 homes has been purchased by a corporate investor. And again, these are flush with cheap capital. They can make all cash offers. They don't have to do a walkthrough. They don't care what it looks like, because they are not looking to live in there and consume it and then build that wealth. They are looking to take it and fix up a little bit and rent it. They don't want to flip it back to a family. They want to rent you the American dream. And they are, if you look at their financial statements, their 10Ks, their annual reports, you will see their language that they like the middle class because they're stable and they've got great jobs and they're perfect to extract rents from, and that they see this as a golden asset class, a once in a generational asset opportunity, which is crazy because you're now taking that opportunity that is the biggest way that families create general wealth, and you're taking that away from them. And it's coming on both sides. It's coming from the run up of the assets and the cheap capital of the competitors. And then you've got these completely wrecked balance sheets on the other side, personal balance sheets that have been wrecked via inflation. So you've got these consumers who have increased their personal debt loads and credit card debt loads and have dipped into their savings. And for the young people, you have balance sheets that are wrecked by college debt from what I call the largest predatory lender in the world, the US government, who ties up minors and people who are 18 years old with 5 and 6 figures of debt for many cases, degrees that don't produce a return on investment. And basically, it's just a huge wholesale transfer of wealth from young people to colleges and their administrators. So you got the balance sheet issues on one side, you have the increasing prices on the other, and then sprinkle in, government regulation, which adds almost $100,000 to the cost of every new home, and all of the state and local NIMBY policies, and the disruption of the labor market by the government policies, which means you don't even have enough people to build these homes if you could get past all of those hurdles. And it's really creating a massive issue. And we're getting more people feeling that American dream is out of reach, or that they're going to rent it, which is, again, central to this thesis of we don't want that. We want people to be able to own things and to participate and fully have that stake in the American dream.
They go against that. You will own nothing. It's amazing policies. They restrict supply, they expand demand, and then we worry that houses are unaffordable.
Right. Shocking how that works out.
We're kind of running out of time here, and I really want to get to what is the final chapter in the book, because to me, that's, after going through all this, you can almost be a little depressed. But
yes.
you actually say, okay, there are some really kind of tried and true sound financial things that people should be doing, that even though we have all of these headwinds, until we change policies, which we need to do, these are the strategies we should be pursuing. And it really just, there's tried and true strategies. I was hoping you could share kind of that final chapter with us.
Yeah, so the final chapter, I got a little Easter egg for you guys. So the final chapter is chapter 11, and it's a little play on the fact that chapter 11 is usually bankruptcy and releasing you of your assets, and you have no ownership. And so I wanted to basically turn that on its head and make chapter 11 about owning everything that you possibly can. And as you said here, I think that the advice that I give is really the same types of things that I would tell you in any scenario. But I think that going through and learning about all of these issues, one, it creates a different lens to look at them through, and two, it creates, I hope, more of a sense of urgency. So the overarching thing, the first thing I would absolutely tell you to do is ignore what the elite are saying and watch what they're doing. Every one of these people who are talking about, oh, we need to get rid of ownership and we shouldn't travel and all these kinds of things are doing exactly the opposite. I mean, we live in a time when the purveyors of socialism have 3 houses, right? So when they're telling you not to own anything, they're predicting non-ownership, like go try to own everything that you possibly can, because that's what they're doing. They're buying homes, they're buying productive land, things like farmland, land that you could ranch on, land that has timber, land that has water rights associated with that. We want to keep that decentralized. So if you have the wherewithal, do that. You have central banks around the world who are loading up on physical metals. So that may be something for you to consider. So it's really looking at these different things that these people who are smart, well-connected, wealthy, and powerful, and want to keep that in place are doing, and trying to mimic that as much as possible. I do think diversification is important. One of the challenges that we have is that we never really know time frames. We don't know duration. We don't know catalysts. We can see the trajectories of these things happening. When I go back and look at previous financial world orders, it's one thing to look at a 20-year period out of a couple hundred years and go, oh, that was a relatively short period of time. But in your life, 20 years is very meaningful. So it takes, it's very difficult if something happens today or 20 years from today. It's a very different outcome, and you don't want to miss all of the run up, let's say, in stocks because you've completely diversified away because you're worried about something like that. So you want to have a diversified portfolio that kind of sets you up and hedges you for a lot of different outcomes. I think that's really important. And then when this last thing is going to sound like I'm a prepper, I've been told. And what I will tell you is there's a nuance here. I think that being a prepper is, and by the way, there's nothing wrong with that. That's a lifestyle that makes sense for a lot of people, but the people who are preppers live that lifestyle every single day. Like this is how they live and breathe. I think the difference between that and being prepared is that when you do the preparation, it's kind of like thinking about your house burning down. You want to have your escape plan. You want to buy your insurance before you see the fire so you can deal with it. You do the preparation to remove that burden and know if and when something happens that you've thought through it and you're not panicking or frozen in that moment and trying to deal with it. So if we had a CBDC put in place, okay, and all of a sudden you might have the access to your money shut down for some period of time, that maybe there's a period of chaos, what are you going to do? Have you thought through getting some small denomination precious metals? Have you thought through, talking to people in your community, who's got the chicken who can lay eggs, and where am I getting the medical care from? Again, hoping it doesn't come to that. We're not saying that it will, but it's not a completely outsized chance, and never going to happen given the backdrop of the scenario. So at least think through those things and come up with a plan that if a CBDC comes into play, or we do have some sort of global chaos, that you've kind of thought through how you can manage through these interim periods. Because, as I said in the book, Mark Twain says history doesn't repeat, but it often does rhyme. And there's a lot of rhyming that's happening now, sounding a lot like a children's poem. So make sure that you've thought through those things, and you may feel a little silly about some of those things, but I don't know anybody who's ever been, in an issue, or even if it doesn't happen, and said, gee, I wish I hadn't been so prepared. That was a bad use of my time.
Well, Carol, we've kind of run out of time, but I just want to thank you so much for kind of sharing your wisdom. And, the book is called You Will Own Nothing. It's fantastic. It's available at Amazon. It was, I think it's still on New York Times bestseller list. So please, buy it. It is worth your time. And thank you everyone for listening in. We really appreciate it, and wish everyone a good